Mm. All right, and good morning, everyone. New week, more opportunities to get better at the game. These levels, I had these levels right here marked down overnight. I was just looking at my phone, and these are levels that I was looking to get taken. Like I said last week, I am looking for all-time highs. Um, Price is pretty much bullish. And today is gonna be a tape reading session. So Mondays, I most of the time Monday can be the clearest price action, but I'm just uh the majority of the time letting Monday print to see what's gonna be the clear direction of the week or for the midweek. So I'm not really interested at all on trading the first day of the week most of the time. There are specific instances where I'm saying, okay, I'm gonna focus on trading Mondays, but this week that's not it. I'll be reading the tape like these live streams because I thought I wanted to just not live stream when I'm not gonna trade and just tape read alone, but I guess this can help other people that are pretty new to the game get better at it. So they listening to my thought process and how I view the price charts can definitely help. So I'm doing it. So now market opens in around 12 minutes. We have buy sell liquidity above this high. So what I'm looking at specifically as of now, I am so we are inside of this perfect. I would anticipate price to get inside of this hourly SIBI. So sell side imbalance, buy side inefficiency. Now, one of the things that we could anticipate, same thing with the trade that I took on Thursday, right? So we have this gap right here. We have sell side delivery. What is this range right here from this candle's low to this candle's high? We are missing by the buy side delivery. So this is a sell side imbalance, inefficient of buy side delivery. So price could easily go inside here, form a small on reversal, and we can have a retracement before going higher. Now, why am I anticipating a retracement and not a full-on reversal? Because we are bullish. Like we are going, it's against of the higher time frame narrative. But if we are in an area right here, which is the SIBI, where we are anticipating price to reject from, in 9:30 opens goes higher, it's we could anticipate a smart money reversal for a retracement. Now we need to find an area where we could anticipate a retracement to. I mean, we have relatively equal lows, and what do we say about relatively equal lows? Smooth edges tend to be made jagged, so we could easily go here. Smart money reversal. We have generated sell side liquidity right above. Generated sell side liquidity right below here. And what do we have? We have a gap. So 9:30 could easily open, get inside this area, and form smart money reversal. Now, hear me out. If price gets in here, and we continue higher with no smart money reversal, then that's not a loss because there wasn't a trade to take to begin with. But if we do, the anticipation could easily be here because smooth edges tend to be made jagged. hmm I need to drink some water. My throat is like dry. I'm excited. I'm excited for this week. You know, Definitely also Monday, it's an opportunity to get back in sync with the market. What do I mean by this? By, taking the weekends out, especially that it was a 3-day weekend. Friday, I don't think I showed up to the short. So I was just, you know, getting away from the market, looking back at the week a little bit, and feeling fresh. I'm seeing a lot of manipulation on random ass times. 9 a.m. Well, that's not random. 7:04. What just happened at 7:04? Wow. I was gonna say the high of this hourly CB is consequent encroachment of this 4-hour wick. That's exactly what it is. Almost. Mm-hmm. No, we can have, in my mind, we can have two different scenarios where 930 decides to open low, take this liquidity, use this busy as support on price, and then go higher into the hourly SIBI, or the other way around. Because most people are gonna look at this. So what do we have? If we ended up taking this low and we have displacement, it's gonna create a SIBI, and this could easily become the 2022 model. But again, I will see this liquidity pool as a total soup, because again, like the narrative is higher prices. Look at that. We did one inside of that 15 minutes. It'd be right there. Buy side liquidity pool. Changing to stay. I'm anticipating this to be the draw. And we have a gap right here. Now this is pre-market open. 930 could easily open, go inside this SIBI, and shit the bed. This is a lot of smooth edges right up here. But this is also a balanced price range where prices went back and forth into it. You see, there are instances where I see Michael taking trades before market open. Like this, we have a low breaker, we have a high, low, higher, high, low. SIBI, 930 opens, it goes into it. I don't know when. That's one of the things that I'm trying to figure it out. Like, because most of the time, this is what's gonna happen. But I see him taking trades like that, and I'm like, yo, I need to figure it out what it is that you're doing, Big G. One day. So there we are on the hourly SIBI. And now this is more inclined to go to this point because we have a low right here, a low right here, and another low right here. So this is more generated sell side liquidity to give the idea to retail traders that the market has formed a strong support. So Retail is seeing this. Oh, this is strong support. Oh my God, look how many times we tapped into it, and we're going higher. So I'm not seeing it that way. I'm going against of that retail traders narrative, and I'm looking to go against of what their ideal setup is. And yeah, we could easily go all the way down here if you want me to be honest. Now, let's see how it would behave around this range right here because this is a lot of back and forth, and balanced price ranges tends to be a little bit more difficult for price action to go through. But let's see. So we see how 930 went high and stopped at a random level predetermined before price even opens. And random levels predetermined before market opens. We see how 930 opens and goes above this liquidity pool. This is trapping also the breakout artist, where they're anticipating a price to go above a high and they just buy, or go below a low and they just sell. And SM, the private entity, is using all that liquidity to counterparty their own positions. There we go, the random level that I outlined before market open. Also the random level that I outlined before market open. You know, I try. Oh my god. Oh my god. This makes me feel like I have the five infinity stones like Thanos. So now we're below this SIBI. I'm anticipating price to go all the way down here. Hence of why I have the liquidity pool. As of now, until I see something else. Now in here we see price grabbing all that liquidity. We have a SIBI right here. This has to function as resistance on price. If we are going to go lower to this liquidity pool right here, we cannot go above this high. And like I said, for price to go here, this is the low hanging fruit. So the low hanging fruit was from the inception, from the hourly SIBI to the generated sell sell liquidity right up here, relatively equal lows in the 1 minute busy right here. And I said, not anticipating price can go here, but it's gonna be a lot harder for price to go down here because this is a balanced price range. We're having a lot of back and forth into it. But I just want you to pay attention what we did at 9:30. Like right here when we went higher right here to a random level. The reason of why price is doing this, it's because there's millions upon millions of people going long above this high. And you know what's also happened? People going short below these lows. And price is just grabbing the liquidity and dumping, grabbing that liquidity and going higher to the anticipated direction, which is bullish. Price is bullish. Now, from this point on, this is what I'm anticipating. If we take this high, if we take this high and we create a busy, I'm not anticipating the hourly SIBI to send price lower. Why? If we go above this high, because we already did the damage. So we're grabbing all that liquidity to send that liquidity towards where? This high. Midpoint of the wick. So now that we went above this buy side liquidity pool, I'm not looking at that to, oh, we took buy side inside of an area, anticipating to reject, let me go short. I'm looking at this, okay. So we manipulated higher one above this high, manipulated lower. We took all that sales of liquidity. In my opinion, where I believe makes more sense is for price to go here. That's just my thought process again. So if price goes down here instead of this busy right here, better if we stay inside of this one. Better if it doesn't even gets into it. And if we are going to lower, we want to see the wicks doing the damage inside of this busy right here. Now, if I was looking, so let's say if I was trading today, I wouldn't taken this long. Let's make that very clear. I wouldn't taken this long targeting this level right here. I would have waited for price to get here for me to look for shorts. Because why? We are so extended. We're so high up. So like if this was an opportunity for me to take, I wouldn't take this at all. We see wicks doing the damage and body telling the narrative. We're wicks wicking through it. And body staying inside of the random price range that I have outlined right here. Now we are seeing this whole move right here. I would be more interested in taking shorts, but as of now, for me, I'm not looking for shorts at all either. Not looking for long, or if it was a day that I'm looking to trade, in here I wouldn't have taken anything. Just patiently waiting. Why am I saying this? Because this right here, this whole thing, this is a balanced price range. This is a whole BPR, balanced price range. And we have buy side delivery, sell side delivery. We close below it. This should function as resistance on price. But I'm not super duper experienced when it comes to taking balanced price range trades. Like I'm aware of it and I'll see it and I'll journal it and I'll get better, get hints of why I do these tape reading sessions. But I'm just looking for my bread and butter, man. The 2022 model. And let's not be surprised. This is exactly why it is a tape reading session. This is what we anticipate on a non-news Monday. We have a high, a low, a high, a low, going higher. you know. And this is one of the reasons why a lot of people just don't get to the point where they're profitably making a little bit of money. Hence, it was my case for the longest period of time. It's because I used to lose my mind over days like this. It's like, oh, this shit doesn't work. This shit doesn't work. No, 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 no. Your level of understanding doesn't work. It's gone. Dun, dun, dun. The land is dark. You know what? I enjoy doing this. I enjoy doing this because I be looking back at my live stream and seeing what I said and something happening before the fact and me being wrong on days like this. Uh or whoever is listening to this for some reason improves your level. Just watching price behave and not pushing a button and seeing that this is not a tradable day for people that are not super experienced. Because I mean, Michael can do whatever the fuck he wants, you know. So So it's not random that I pick a random day to tape read, or I pick a random day to trade on the account. No, there are very specific reasons why I do what I do. I mean, will you be glad if you were short in here? Will you be happy if you were short in here? Price doing this now, or if you were long inside of this right here. I said I was if I was in a tradable day, I wasn't even looking to go long in here, even though I'm anticipating price it most likely will go here. But we could form and hear me out. A one key point that makes a low probability day a low probability, it's when we are able to form an idea from both side of the marketplace. So we could easily form an idea for price to go higher, and we could also form an idea for price to go lower. We have generated buy side liquidity right up here, but also we have an idea that the narrative, higher time frame narrative, is bullish. So what are we having? We're just going back and forth inside of these two price points and doing absolutely and utterly nothing. So this, for some reason, to us as traders, we wait till we burn everything to understand a simple shit like this. If the day is low probability, if the market is likely to chop, just don't trade. That's it, man. Like the market ain't going anywhere. Just don't trade. Don't show up. Well, show up at least and tape read, or watch someone else tape reading or whatever it is. But don't push a goddamn button, man. Market ain't going anywhere. It's not running away from you. And to me, and I'm talking to myself. Let me make this very clear. I'm talking to myself. I don't know why it took me so long for me to understand that simple fact. It's like we're looking at this, right? What? I have no clue. If you want me to be honest, I have no clue what price wants to do right now. Right now, I have no clue. If you want me to be honest, the simple thing, low hanging fruit was right at market open, where I said price can go here and then go towards these relatively equal lows and busy. Then after that, I had no clue what price wanted to do. In here at this point, I would not be interested in longs. Price can go 3,000 points higher, but I'm not. If this was a tradable day, not looking to go long. Even though that we have a buy sell liquidity pool where I'm anticipating price to go towards. If let's say for example, if price is looking like this on a day where I'm allowed to trade on the account, I'm not going long in here. Let me just make that very clear. I'm just not. Because look at this. And you know, on days like this where I was like, it's a high resistant liquidity run conditions, and let's say if we have a model where it's like, oh, I'm going long, and price just does this, it takes 30 years to go from inception to terminus, and it's a winning trade. I used to be like, hey, if it's a winner, it is a winner. Who cares? Bruv, the difference that it makes when you get into a trade. All right, let's stop that for a second. So, if we inverse this BISI right here, so let's say it was a tradable day. If we inverse this BISI and we create a SIBI, I'll go short in that, targeting this wholesale liquidity pool. If, y'all heard me, if we do the things that I said, because I'm not anticipating for them to form, I am waiting for them to form if they do. So if we go lower right here and this place below this BISI, this could be a shorting opportunity. You just heard what I said. If. And this is also one thing that used to happen to me a lot where I was literally predicting something to form instead of waiting for it to form. So let's say this candle was right here down here and I'm like, "Oh, it's going to go lower. Let me just go short because I'm predicting that this is going to form, that this placement is going to form, that the retracement is going to form." And as we can see, I used to get destroyed a lot. So it's like wait for the model to form and then execute fearlessly. If the model is not present, there's no reason for you to push a button. So you heard what I said. If, yo, this used to frustrate me a lot so much. And I hope whoever's watching this, you are getting something out of this. Yeah, because I'm just spitting. I'm just spitting on a non-use Monday. I'm literally just spitting. Facts. So I need to slow down a little bit. Jesus Christ. And I see, like I said, that I wasn't anticipating a full on smart money reversal lower. I was just looking for a retracement because, like I said, the narrative is bullish. And it used to take me a lot where I was always wondering why are we not taking those relatively equal lows? Why that looks so smooth? Because you're going against the narrative. It's like it's gonna go there, but at a later point in time, when when it goes to a more specific level that it wants to reach towards. You see this close right here? Now I'm not looking to go short and I'm not looking to go long, but the clear direction is above this high. Like if we're closing above this PDRA, like this is a SIBI. This should have acted as resistance on price, accumulate a little bit, and then go lower. But what we did, we closed above, we're into it, the anticipated direction is higher. But if I wasn't a trading that, would I go long in here? Absolutely, not only not. What I could have been interested in is this trade that could have formed in here where we inverse this busy. But again, if we are bullish, this is exactly what should happen. Wicks doing the damage, body telling the narrative, closing right at this candle's low, and then going higher. If it would have gone lower, right here, creating displacement, then a retracement into it, that would have been a field for me, targeting relatively equal lows. This is what I'm talking about, high resistance. It's like, yeah, we're going higher. Chop, 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 chop. Retracement, higher. Chop, 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 chop. Retracement, a little higher. We're still inside of his range. Like, if you the trade that I took on Thursday, oh my god, that was so painless. I was like, I just get in, out, done for the week. Cool. That's it. That's what I look for. And one it's a double-edged sword because it makes you feel like you're doing nothing. It's like 3 minutes on each trade, and I'm like, what do I do now? It's like at least when you are trading a high resistance liquidity run, you're sweating and stressed out. You feel like you've worked out for 30 minutes. Um, but that's about it. But the mental capital that you save from being willing to let days like this get away from you. This is a return back inside of the inversion CB, inversion FEG. But again, from this, is that a 2 minute busy? From this 3 minute busy right here, this could have just gone here. What if it did back inside the range? Imagine if you had a partial or getting out right here and the market does this. I mean, me personally, I would have been losing my mind. Like, come on, man, just go there. It's not so hard to go above that buy sell liquidity pool. Pick the days when to trade. Now, as of now, in my eye, how do I see? I see this move just as purely manipulation. Pure manipulation back inside this busy. As long as we don't go below this low, more importantly, this busy, this is the level that is outlined. How happy would have you been if you had a getting out right here and price does this? Y'all heard me say, I mean, I told in the live stream, if it was a trading day, I wouldn't go long in here. I wouldn't go long in here. I was looking to anticipate a short end right here. But again, this is this is nothing, man. Ugly, ugly price. Ugly price. Ugly price. Oh, that's why I'm a little tired. Haven't made coffee today. Just wait till I get that coffee. Be pumped. We'll be pumped. Now let's say this was a trading day for me. We failed to get above this liquidity pool, and we are inside of a huge consolidation. But let's say I'm willing to take a trade. Let's say I'm willing to take a trade. If we create a SIBI right up here, the next candle opens and we tap into it right here, and we repel that level. If we do that, like this is no, yo, this is bad. Yo, this is this is exactly what I was anticipating, but not this bad. So we see price. If this candle goes instead of this up close candle, right? We're still wicking. Let's say going short, low risk, stop loss above this high, targeting this liquidity pool. Stop loss above this high, targeting this liquidity pool. And let's say my regular position is 5 contracts. There's a like if I'm looking literally going low risk on this. Stop loss above this high, targeting this liquidity pool. This is a trade I'm willing to put risk on if I was trading. If that makes sense. Stop loss above this high, this liquidity pool. So like I said, clearly in here, I wouldn't go long in here. I wouldn't go long in here. I was looking to go short in here if we inverse this for value gap the first time. But now I'm hypothetically short now that we ended up inversing this. So if we're looking for lower prices, this SIBI should function as resistance on price if we retrace into it. It's better if it stays open, but if we do, that's a short. So now risk is removed. Risk it's above this high. No reason for price to go this high. It's not even here now. It's here. So if price goes into it, SIBI, shorting opportunity, high. So right there, short, stop loss above this high, sells a liquidity pool. If I would have been trading, this is a trade I would have put a risk on. Right here. And leaving one, maybe to go here. But again, I'm focused on more of the low hanging fruit, which is this. And what is it? 1-1. 63 handle move, 47 stop loss, decent trade. There we go, the random level. And you see how long it took from exception to terminus? 2 minutes. 2 minutes. Definitely leaving one contract. Let's say if I was in 2 contracts, leaving one contract to go here. It seems that it's willing to go down there. but most of the position would have been off at the low hanging fruit. So let's say if I would have been hypothetically short into this, where my stop loss would have been break even, I wouldn't really give a shit if I got stopped out because most of my position would have been off right here. And if price wants to go down here, then it has to do it in a quick manner. But there's one of the reasons of why, let's say I wasn't anticipating, because I could have easily go short inside right here, but we missed this liquidity pool. I wouldn't, I wouldn't, I'd be comfortable taking a short when we made relatively equal highs like this. If it would have went above it and then have this SEBI right up here, I would have slapped that shit. Hypothetically, because I'm not even looking to trade today. I would have slapped it right here. But I feel confident in it right in here. Because I'm like, yeah, we are disrespecting every single bullish PDRA. This was the last line of defense. And now we create a SEBI and we have relatively equal lows. Yeah, price does not want to go here at all. So we went into it. That's the short. Stop loss above this high. Low hanging fruit. Leaving a contract right below here to the random level. And these are the things that I'm weighing out day in and day out. So whoever's watching, I hope you got something out of it. Got a couple things here and there. I'm anticipating this. Let's say hypothetically leaving a contract. Uh, and this was the tape reading session for today. Tomorrow I will be on the account and let's see if we're able to catch something. And if we catch a good of a move, then I'm gonna be done for the week, and then that's pretty much it. Rinse and repeat. But we'll see. The last 4 or 5 trades that I've taken have been winners, so let's keep the consistency going and keep on improving upon the things that we need to improve on. I'm gonna go back to the drawing board, and I hope everybody was watching is going back to the drawing board. And there we have the random level that I outlined, and that would have been all out. So if we took this liquidity pool right here, I don't care where the market goes now. The market could literally dump 3,000 points, and I wouldn't give a shit. I would have been all out right here. Last contract.